All right. Good morning again, everyone. It is the 9th of May, Monday morning. Back to a brand new week of trading. We just had the non-farm payrolls on Friday last week, so we'll go through that as well. But for Monday, we are looking at the dollar index. We're looking at the Aussie dollar and the Kiwi dollar as well, and also possibly, getting you some trade ideas leading up for the week. If you are watching us on YouTube, then make sure you check out the links and join us live for this call that happens every Monday through to Friday at 11 a.m. live for Traders Club members. So you're watching us on YouTube, this is slightly delayed. Make sure you check out your charts, make sure you check the prices before you jump into your trades based on what I've been looking at. With that said, quick disclaimer, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself, so please remember to do your own analysis prior to entering any trades. Right, so jumping straight into it, looking at the news here on forexfactory.com, not a lot of news happening today with the Aussie or the Kiwi dollar in particular. But before we look into what could happen through the week, just do a quick recap. On Friday morning, we did see the RBA monetary policy statement released. Not a big surprise. That didn't move prices too much because in the evening we did have the CAD and also the US non-farm payroll employment change numbers. This was quite an interesting number that got released on Friday night. What we saw here was non-farm payrolls, non-farm employment change number was 428, got slightly revised from 431. So a slight revision there. Expected to drop slightly to 390K, but it got released at 428. So in this case, a little bit of an upward move in non-farm employment numbers, and also unemployment rate did not drop, right? So it did not drop, it stayed at that 3.6%. So no change in unemployment, which despite it being a red number, right? 3.6 was a red number. It's not such a bad news for the US. It actually showed some level of stability. You can't always have a unemployment rate dropping. It would be a little bit unsustainable, or it would also lead to inflation running a little bit too hot, again, as if it's not hot enough. With the average hourly earnings from a 0.5%, slight revision from 0.4. It was expected to hold at 0.4. It dropped slightly to a 0.3% on the average hourly earnings month on month. This slight drop again could be an indication of the FOMC actions in terms of increasing rates and how they have tried to slow down inflation. So first things we are seeing now is average hourly earnings. This is wage inflation slowing down a little bit, but I think this is still very early days in terms of whether the US inflation is going to start turning down from its very high point. I think it's very early days. We might still see some upside in the US inflation numbers, but this shows some level of impact or influence that we've seen from, we go back to Thursday, the FOMC's rates decision moving from a 0.5 to a 1%, and the indication that they're looking at further rate increases into subsequent meetings. So with all that, that was last week. What we have to look forward to this week is, you can see that for Monday, Tuesday, it's going to be a little bit low in terms of news, but this could be a good thing that we're going to see a bit more of a trending scenario. We're going to see more trending trades happen, and trades have been moving in a very good and strong trending fashion. So right now, what you should be looking at is all the trend following scenarios, right? All the trend following trade ideas. And on Wednesday, very importantly, we're going to see the US CPI number. month on month was 1.2%, expected to be a 0.2. Core CPI looking to increase slightly from a 0.3 to a 0.4%. So we're looking at CPI numbers or inflationary data there from the US, looking to stabilize a little bit, slow down a little bit there, in influence from the FOMC's rates decision most likely. But whether this is going to be a long-term thing, still, again, I think it's early days. But with this number here, if that does come out that way, we're likely to see or to reinforce the idea that the current FOMC's rates decision or rates action or policy timeline and action is having an impact. And that's why we're going to see a continual action from the FOMC to increase rates, right? So this on Wednesday will be quite crucial. I think we're going to see quite a good price movement at that with that news release. And then on Thursday, still with the Aussie and Kiwi in focus, we do have inflation expectations for Australia and inflation expectations for New Zealand to be released. You can see here 5.2%, 3.27% for New Zealand, still climbing in that upward fashion. I think we're going to see inflationary numbers on Thursday, or expectations on Thursday for Aussie and Kiwi to move towards the upside. So this might trigger more action coming from the Reserve Bank of Australia and the Reserve Bank of New Zealand. With that on Thursday, and then on Friday, again, not much news to be released. So this week is going to be likely to be a trending fashion. You're going to follow the trend. I don't see any big shocks or big surprises coming in terms of fundamental news that could push prices to reverse or to have significant corrections. With that, what you should be looking out for, looking at the dollar index here, dollar index on the H4 time frame right now at 103.92, coming very close to that 104 level. We've been talking about this 104 level several times already through last week. On the 28th of April, we were saying that, we're expecting it to push up, didn't. Again, on the 6th of May last week, came very close before retracing back down again. And right now, pushing back up. This move looks like it's going to push the dollar index above that 104 and towards the 105 level. At this point, still wait for it, but we're seeing dollar strengthen across the board. We're looking for this to push above 104. And if it does go above 104, I would say that we could see that move towards 105. Remember, a trending scenario, a trending move for this week, so that could lead to that move towards the upside. Similar as what happened here in late April, we saw it come towards 101, had that big retrace all the way back down to 99 before that big push all the way towards 103. What we're seeing here happened towards early May was that retracement from 103 almost towards that 102 flat number before now looking like a big push towards 105 and possibly even towards 106, right? So at this point right now, just be a bit careful. I don't think it will move straight up towards 106 unless we hear from the FOMC about, their plans for stronger or more aggressive rate increases. They are talking about that 50 basis points to continue, that 50 basis points increase to continue. So we're looking at that to push up, but it could be a priced-in scenario. So, we're going to see the dollar get stronger, stronger, stronger all the way towards the next FOMC meeting before it retraces back down again. Similar to what happened here, I'm looking for this to push above 104. If the dollar does go towards 104 and break that 104 level, it'll be quite a straightforward trade on the Aussie dollar. Aussie dollar, the last time we spoke about it, I was looking for it to bounce, zoom up a bit, to bounce off this 0.7 or 0.71 level towards that 7160 and turned down. It kind of did that, but what actually happened was it broke a lot above that. This was because of the FOMC news, and then it tracked all the way back down right now. So now it is sitting at 7018. I'm looking for that dollar strength to push the Aussie dollar down below 0.7. This is a very crucial point. At 0.7, if I went to the weekly time frame, you can see that in Jan, it hit 0.7 and bounced off. In November last year, it hit 0.7 and bounced off. The last time it broke below, so from top, it broke below 0.7 was back in 2019, where it broke below 0.7 towards 6866. So I'll put a line there. At 6866 was when it broke down and bounced back up towards 0.7 and broke down again. And below 0.6866, we can see, I'll move this lower, at 6744. So these are the next two support levels you can anticipate for the Aussie dollar towards the downside, 6866 and 6750, about 6750, right? So what I'll be looking for here, back to the H4 time frame on the Aussie dollar, is for the Aussie to break below 0.700, for that dollar strength to push the Aussie dollar down below 0.700, and I would be looking for that selling opportunity. So about 6976, 6970. So below 6980, you'll be looking at a selling opportunity, about 40 pips towards stop loss and 100 pips towards a take profit level. You're looking at a 1:2.5 risk reward ratio towards the downside for the Aussie dollar. A lot of patience required here, as we need the Aussie dollar to break below this very strong support level at 0.7. If it breaks lower, at below 0.6980, look to sell down. 100 pip stop, 100 pip take profit, 40 pip stop loss, a 1:2.5 risk reward ratio towards the downside for the Aussie dollar. There's a trend following trade there. With that, what we could look for is a similar move, and this has already formed. The Kiwi dollar towards the downside, it's already broken that 6.4 level, right? So the last candle has already broken. Right now it's broken that 6.4 level and looking to consolidate a little bit. The last time we spoke about Kiwi dollar was for that rejection of 6540 towards the downside. I hope you did jump into that trade. That was a two-part trade we looked at, about 150 pips move towards the downside at this point. Again, back to that weekly time frame to look for the next support level, 6200 or 6217. Zooming back out, this was the point that we saw it come towards at 2019 in September. And again, Feb or March 2020. So this move towards the downside, we're looking at for it to come down towards the 6214 level. And if it does break, we can see further downside, very significant downside towards the 5711 level. I don't think we'll see it drop that much. Actually, I'll move this down a little bit. At about 6170. So I'm looking at a middle point between this and this level. So at about 6170 will be my next support level. So coming back to the H4 time frame, what to look out for on the Kiwi dollar at this point might be a little bit late to jump into a trade now. I would say either accept the risk, be able to take on a little bit more risk and say that you're looking to sell down at 0.6350, below 0.6350, a stop loss at about 50 to 60 pips, a take profit at 150 pips towards the downside, a 1:2.5 risk reward ratio towards the downside for the Kiwi dollar. You can either look for it to continue moving down to sell, or what you could also be looking for is for it to track up, test that resistance again, and then sell down. So either to look for it to continue that move towards the downside and look to sell, or for it to bounce up, hit the 6-4 level, reject, and then sell down. That might give you a bit of a better selling opportunity towards the downside, where you could be looking to keep it a bit tighter. 6380, a tighter stop loss at about 40 pips, a take profit at 190, but you can look to close out anywhere in between at that, towards that support level. So with that said, Kiwi dollar, Aussie dollar looking to sell down as it breaks its very strong support level. But remember, every time it breaks a very strong support, we're going to see more volatility. We're going to see, it tests that support level quite significantly before it drops further. So keep your trades reasonable, keep your trades short term. Be ready to take a profit quite quickly. But if you're looking at a longer term trade, then we can see it possibly move down towards the next support, especially if the dollar index does break above 104 and move towards 105 and possibly 106. With that said, it's a brand new trading week. Make sure you trade well, trade safe, and we'll see you tomorrow for the euro dollar, euro pound, and also more moves on the dollar index. See you then. Bye bye.